Hello everyone, I hope you're well, hope you're doing alright. So today I see two trades on the charts. I'm going to be taking one of them and the other one I'm going to restrain myself from taking it and decide not to take it. I'm going to explain why. So the first entry model that I see on the charts is for US oil today. So what do I see here on US oil? I see that the markets have made it all the way up into these liquidity zones right here. As you can see, 1, 2, 3, tapped into all these highs. We've had these highs also as well. Look at that. We've had this, we've had that right here. And what we just did is we just liquidated all these zones and we're starting to push through to the downside. As we started pushing through to the downside, what can we see here? Look at the bottoms. We also started creating bottoms through to the downside. So what we just did is we liquidated through to the upside all these highs, and then we pushed through to the downside and created liquidity through to the downside. And therefore, just based off of a comparison of points, this point and this point right here, we can see that this point right there is a liquidity clearance point, while this point right here is a liquidity creation point. And therefore, the market tends to move in the direction of any liquidity creation point, and therefore I see that execution setup as very well positioned right here. We can take it through to the downside and it can take out all these lows through to the downside right here. Amazing execution right there. However, as much as it is amazing, as much as I am willing right now to stay far away from that trade, and I'm actually not going to take it. So I'm going to restrain myself, even though this execution is very tempting. I'm going to restrain myself from taking this trade, and I'm going to explain why to you here on the higher time frames actually. So look at what happened right here. So as the market was going down, the market right there liquidated through to the upside all these highs and then it started pushing through to the downside, which to most of you and even to myself is an indication that the market is going to continue going down after this liquidation through to the upside and then that push through to the downside right here. Look at that momentum with that bearish candlestick right here through to the downside. So we can see that the market is or wants to go through to the downside from that point right here as soon as we printed that big bearish candlestick. However, my question is always, where are we going? What is it that we want to do? And what I can see right here on the charts is after liquidating through to the downside, we went down, we created all these bottoms right here and these previous bottoms as well that were created right there. And as you can see, the market just pushed down into them with momentum right here, liquidating all these bottoms right here and making it all the way below this low right here, which could carry a lot of stop losses through to the downside. After we grabbed this low right here, the market then started pushing with bullish momentum through to the upside above these highs. And therefore, I can see that right now, this point in the market right there is a liquidation point. And therefore, since this is a liquidation point right here, I am not going to be selling into a liquidation point. I usually buy from a liquidation point to a liquidity creation point. And therefore, right here, I can see that the market can push up because of that liquidation point right here. And therefore, my bias, if I want to make it a long story short, my bias is not bearish for US oil right now. My bias is that we just grabbed liquidity through to the downside and then we pushed with momentum through to the upside. And this is in no case bearish bias or bearish momentum through to the downside. Now also, I can look at that push right here. We had 1 drive, 2 drives, 3 drives through to the downside, which further confirmed the bullishness right now of this instrument. And therefore, I'm going to be staying away from US oil and I'm going to be restraining myself from taking that really good execution on the 30 minutes right here that we can see because of the 2 hours picture that we have right there. And this is what we do as traders. We know the higher probability setups. We know which ones we should be in and which ones we shouldn't. And right now, that 30 minutes, even though it's looking great, on the 2 hours, it just lowers the probability of this going down very much. And therefore, I'm going to be staying away from it right now. Let's see how that goes. Now, the second trade that I have on the charts is this USD JPY trade right there. Let's have a look. The market, as you can see, look at this. Let me zoom in on my execution and explain it to you. What the market just did is it created these bottoms through to the downside right here, and then we just pushed into them right there, into these lows right here. We created bottoms, as you can see, and then boom, into them, big bearish momentum right here through to the downside, and then we continued going through to the upside. And therefore, easy entry for me. I just expect the market to retrace a little bit, and then I'm going to enter through to the upside. Now, let's go to the higher time frames and see what was happening on any high time frame right here. As you can see, what the market has done right there. It was pushing with momentum through to the downside all the way from the tops right here. We created multiple drives through to the downside right there, finally created some bottoms right here, and as you can see, we just pushed into them with momentum right there, and then started pushing it through to the upside. And therefore, I can see that the market just signaled a reversal right here after liquidating through to the downside. So this right here is a liquidity grab point, and then the market started pushing through to the upside. I do believe that USD JPY has the room to make it all the way up into this high right here, and therefore my bias for USD JPY at that moment is bullish, and I'm going to be taking that trade right here. 30 minutes retracement through to the downside into this area, and then we're going to see how that goes. Hope you're doing well this morning. So for US oil, as you can see, the market pushed in the opposite direction, and therefore we were right to avoid that trade. That's for US oil. Now for USD JPY, as you can see, the market just this morning tapped into my entry right here and then just pushed through to the upside into the TP. The trade is already closed for me. I just saw it and I closed it. And therefore that's it for USD JPY and US oil. So today I am taking two trades. We've had a US oil trade right here that I decided to avoid, and that turned out to be perfect because I believed that we are in a bullish market for US oil. As you can see on the 2 hours right here, for example, the market liquidated these bottoms right there, and then we started pushing through to the upside, to which I believe that, you know what, since we liquidated through to the downside, since the latest liquidation is through to the downside, I'm going to stay away from that entry model right here to the downside. As you can see, the market liquidated through to the upside, 1, 2 highs right here, and then started pushing through to the downside and creating liquidity with that low. That was the entry, or that was supposed to be the entry right here, targeting the lows right here and this area through to the downside. However, I have decided to stay away from it because I've seen bullishness on higher time frames, and therefore decided that US oil is bullish right now and is not going to be pushing through to the downside from this area. So what I did today is I joined that movement through to the upside after that setup failed right here. So you guys know that if I have, as you'll see right now, how my setups all play into each other's. Now right here we had a liquidation through to the upside, and that push through to the downside signals a reversal for us, tells us that US oil wants to go through to the downside. Now that reversal failed through to the upside right here, and usually when a reversal fails, I look for the next level of liquidity. So what I say is, let's say let me draw it a little bit as an example right here. So let's say we have liquidity, and then the market grabs this liquidity. Let me draw it in another manner. So let's say we have this, let's say, area right here of liquidity through to the upside, and then the market takes out this liquidity right here, and then it starts pushing through to the downside. Now usually you look at this as a liquidation through to the upside, and the market is pushing down. Now if the market, this is a sign of a reversal, so if I see it on a higher time frame, I'm like, okay, right now the bias could be bearish and we could be looking for lows to be taken through to the downside. However, if I see that the market failed that reversal, it means that it's not done grabbing liquidity through to the upside. So this is only the first area of liquidity that the market has grabbed, and now we will eye a next level of liquidity. So let's say there's some tops up there, whatever liquidity zone that we have right here, whatever volume area that we have right there, I will target this area. That will become my new target. So right here on the 30 minutes, what we can see is the market liquidated these zones right here and then started pushing through to the downside, telling us, hey, I'm going to reverse through to the downside. And then that reversal failed right here and then gave us an execution through to the upside to the next levels of liquidity. Now, where's the next level of liquidity? We can see these stops. Look at that right here. As soon as the reversal failed, we started creating more liquidity through to the upside, and I believe that we are headed at least into their stop losses, into this bullish candlestick right here at least. So this is where I'm going to manage this trade, at the $70 mark right there. So that's it for US oil. This is how I'm looking at it. Now the other trade that I am eyeing for the day is this UK 100 trade right here. As you can see, the market was pushing through to the downside right there. And then the market right now just liquidated these bottoms with that big momentum candlestick to the downside, and then we started pushing through to the upside, and therefore I decided to join that movement through to the upside. Now on the higher time frames, if I'll go look at the 2 hours, this is what I see. Look at that. I see that the market pushed into a major zone of liquidity right here. Look at this zone right there. So 1, 2, 3, you can count like infinite touches inside here. I'm not going to count them all. Big area of liquidity, order blocks, imbalances, double bottoms, everything inside this area right here was liquidated by that push through to the downside. And then the market is right now retracing after the liquidation. You can see that the market made it below that last low right here, and then we started pushing through to the upside. So I believe we can get at least a little bit of a retracement right here on the 2 hours, at least into these areas right there, these stops, and then we see where we go from there. Now I don't believe that UK 100 is bullish on a long enough time horizon. However, I do believe that because of that liquidation, we can receive a small retracement into these areas right here, right there, for example, like this, and then tap into this area and then see where we go from there. I'm going to manage that trade starting as soon as we reach these areas right here. Let's see how that goes for UK 100 as well. We can also see kind of a 3 drives through to the downside right here. 1, then 2, then 3. Let me zoom in. 1, 2, and 3 to the downside into that liquidity. The second drive right here, as you can see, the 2 ended right here, created bottoms with these lows. And then the third drive came below them right here and then started pushing through to the upside. So I see that this is just like a retracement into this area. And therefore, to be fair, the UK 100 trade is not this like, let's say, very high quality trade, because I don't see that UK 100 on a long enough time horizon is bullish. I know that while taking that trade, I know that UK 100 for me, because look at the daily, for example. Look at this. What we can see on the daily right here is we can see that the market pushed through to the upside into these tops right here, and now it's starting to push through to the downside after liquidating these highs, after pushing into them. And therefore, I don't see that from a long enough time horizon that the market right here on UK 100 is like bullish and it's going to cover all these tops through to the upside. Right now, I see small bearishness from a long enough time horizon, but on the 2 hours, I see small retracements through to the upside that can happen. I understand that. I understand that the quality of that trade is not that high. However, I am still willing to risk my money for it, and therefore this is what I am going to do right now. So we have US oil and we have UK 100. Let's see how those trades go. Alright, let's look at UK 100. So UK 100 exactly as anticipated. The market made it all the way up to the beginning of that 3 drives pattern through to the downside on the 2 hours. As you can see right here, we had 1, 2, 3 drives through to the downside. Then the market made it all the way up back into the beginning of that drive. So exactly as anticipated. I told you that UK 100 is not bullish. It is bearish due to that daily time frame price action right here. The market grabbed this liquidity through to the upside and then started pushing down with momentum right here. And I consider that UK 100 is going to be bearish. However, I expected UK 100 to just retrace right here, and I traded that small retracement through to the upside right there. 1 to 3 risk reward ratio, done, as you can see. US oil, right there, we avoided that first trade, not going to explain it again. That second trade right here, market pushed through to the upside, almost into my TP area. And then the market came back all the way down into our entry point right here, and then pushed all the way back up into those liquidity right here. So what happened here? Let's analyze what happened. The market created further liquidity with these highs right there. 1, 2, started testing them, 3, 4, 5, right there, and then the market pushed through to the downside into our entry and then pushed all the way up into them. A lot of people are going to ask me, why did you not get emotional right here, or how do you not get emotional right here when the market makes it all the way back from your TP all the way down into your entry? Now, I'll answer quite honestly that question specifically, to this trade specifically, is that I haven't seen it. That's it. I come to the charts every day at 9 a.m., basically spend almost 30 minutes to 45 minutes and then leave. So right here, I came to the charts at 9 a.m., took this trade through to the upside. Then came back to the charts right here on the second day. Thursday at 9 a.m., where is it? Right here, the market was almost around my TP area. Then I left the charts, came back the next day, Friday at 9 a.m., right here. The market already has done this and then is pushing back into my TP. So I haven't seen the market push into my entry, and therefore this is a big reason why I don't get emotional with trades. It's because I'm not observing the charts all the time, and therefore I'm not observing my profits fluctuate, and therefore this doesn't trigger any emotions because I'm not here. I just take my trades and leave. And this is a big hack. Yes, you need to work on your mindset. You need to work on your brain. You need to work on your emotions. You need to work on your tolerance to stress. You need to work on a lot of things when it comes to trading and when it comes to emotionally tolerating the charts. However, one very simple hack, one very simple tip, one very simple solution to emotional trading is that take your trade and walk away. Look at the charts for 30 minutes per day. Take your trades, place your orders, and walk away. And if you don't see anything and you don't know anything, then there is no reason for you to get emotional. That's one way I work on that problem, and it's very efficient because you don't see any of that. So that's about it for US oil and UK 100. I hope you enjoyed that video, guys, and I'll see you in the next one. Let me know in the comments if you enjoyed this one.